Welcome to the source of commercial real estate, where we talk to the experts in non-residential commercial real estate so you can grow your business, find a competitive advantage, and use real estate to live the life that you want. I am your host, Jonathan Hayek, and today I am talking with Dan Wendorf, Executive Managing Director for the JLL Columbus, Ohio office, with a particular focus on industrial services. Dan is a market leader in tenant representation, agency leasing, capital markets, and real estate advisory for industrial tenants and investors. I'm really looking forward to hearing about the industrial market in Central Ohio. Dan, how are you doing today?
Doing great. We're sitting here 10, 11 days before the end of the year, but with, the way the markets are these days, with what's transpired over industrial, really these last 4 or 5 years, we're still, full speed ahead, full days right now. And the industrial market remains very dynamic, not just here in Columbus, but across the country. So I'm doing great and appreciate you having me on today.
Can't wait to hear about this. I've heard great things about the Columbus market, and we've got an expert here with us today. So sincerely looking forward to getting your expert opinion on the Columbus market. Dan, why don't we start out with a little bit about your background, how you got started in real estate brokerage, and what your work looks like today?
Sure. No, absolutely. I've been doing this now, I think about 17, 18 years. First started working with Roger Staubach and his firm back in 2006. I've been out of college for a few years and was just looking for something more entrepreneurial within still a corporate structure. Staubach company was growing at the time, was fortunate to come on board, didn't really know anything about real estate, much less industrial. So a little bit of baptism by fire during those early years. At that time, I guess we were going through a recession in 07, 08, but I didn't really know it because I never really knew good times in real estate. So I think I always tell people, I think it was the perfect time to get in when the market was down. You had to work that much harder and, focus that much more in order to get your career going. And then Jones Lang LaSalle acquired the Staubach firm and have been at JLL and proud to see the growth our firm has taken place. Both in the services we're offering clients and just our reach around the world. But like you said, top of the show, I spend my time in the industrial space doing a lot of tenant representation, working with users in the market that are trying to figure out their supply chain needs, trying to figure out their manufacturing needs, helping them with the site selection process. And then we also do a lot of work with landowners and developers that are trying to find those types of users to occupy space in their buildings. Columbus has certainly seen a lot of growth in the industrial space. It's not just your traditional logistics market anymore. But every day is different right now for me. The advent of these different industries that are coming in Central Ohio really make it exciting in terms of, the solutions we're providing for our clients every day.
So, Dan, let's talk about Columbus and the Central Ohio market. I'm not in Ohio, but even I know about the investment that Intel is making in Columbus. That is, it's a well-known nationwide that Intel is making that investment. But can you talk about that investment and other investments that are being made in Columbus, and what makes Columbus and Central Ohio a great place to do business right now?
Yeah, absolutely. I mean, you look at what's happened in Columbus. Obviously, we've had some huge headline announcements these past couple of years. You mentioned Intel, other ones with Honda, and some pharma and life sciences groups. It really speaks to what Columbus has been doing, the last 10 years in order to lay the groundwork to be ready. And I don't know if we're laying the groundwork and really ready for what we're planning to be ready for what's happened. But certainly the work that's gone in, the public-private partnerships, to have the communities coming together, to have the public sector coming together, development community come together to go after some of these mega projects has really paid off. And it's a, no pun intended since it's December, but it's a snowball that keeps getting bigger and bigger, every time we turn around. The Intel one is in the scale of about $20 billion to chip manufacturing facilities that if you drive around New Albany right now, You can see them coming out of the ground. People ask us, is it really happening? Yes, it's really happening. We've been told the 2 largest cranes in the world are sitting here in New Albany working on the Intel site. And, that was really, I think, a wake-up call maybe for the rest of the world for things we already knew here in Central Ohio in terms about doing business, the workforce, the economic policies we have that embrace and encourage strategic investments by these companies. The Intel announcement, I mentioned Honda, they're building a $4 or $5 billion electric vehicle facility, new car manufacturing here in Greater Central Ohio. And then just on top of that, you just have diverse industries that have realized that investing in Central Ohio is beneficial to their business, it's successful, and they really have a great opportunity to grow their business and just have a great place to make their investments thrive here in Central Ohio.
Well, if brokerage doesn't work out, I think you can get a job with the Chamber of Commerce.
There you go.
I'm wondering, you talked about the snowball effect, and I'm wondering what it is about the Columbus area that makes it so attractive. And what was, you being boots on the ground, was Intel really the first snowball? And then other companies saw what was being done and they thought, well, if it's good enough for Intel, then it's got to be good enough for us as Honda or whomever. Can you talk about kind of what the attractiveness of Central Ohio has to this advanced manufacturing?
Sure. And, I don't think Intel was the beginning of the snowball. I think Intel, when they started doing their national site selection process, they were able to see the track record of success in Central Ohio, see the other companies that were doing well. And they're like, you know what, our playbook can work here. One, we are still, I would characterize, relatively a young city in terms of the thinking, in terms of the ability to grow, the ability to take down land. You look at Columbus and ability to reach 65, 70% of the U.S. population in a one-day truck drive works well for a lot of different industries. Our tax policy is, sometimes the word pro-business might have a negative connotation to it. I like to use the word, smart business, smart community in terms of how we're setting up our economic development and the taxes, that it's really helping, everyone with how they're living and working in Central Ohio. But, we've had a rich history of significant data center investments. When you look at, the Facebooks, Google, Meta, I don't know if it's still the largest one. For a while, Facebook's largest North American data center was right here in New Albany in Central Ohio. So, the geographic location, paired with the ability to, secure land, put development in place, I won't say have few barriers, but have the right barriers to entry, but also the right ability to allow companies to come here and make their investments, has just really created an ecosystem that each company, when they come here and make the investments, you mentioned Chamber of Commerce. What the Chamber of Commerce told them actually is true. And they're doubling down on their investments, and they're telling their friends and family, and they're coming here too with their companies.
Will you talk about the opportunity that has been presented for maybe smaller investors, people that aren't building $20 billion chip manufacturing facilities, but are you seeing any of the investment from the big players trickle down to create opportunities for others?
Absolutely. And I think that's the wonderful thing about what's happening with the growth here right now is you're seeing it not just with the mega developments and large ones, but you're seeing it on a smaller scale. You're seeing maybe a local community that, was, kind of looking for some economic boost that is now benefiting from all these other larger investments that are taking place in Central Ohio. You're seeing, some of these smaller landowners that, may now be able to, sell their land because they're in the pathway of development and benefit economically from that if they choose to do so. So whether whether it's a 5,000 square foot space or a million square foot space in our market, we are really seeing a healthy balance of demand and a lot of opportunity to go around. New Albany is, mentioned a lot, but you look at what's taking place southeast, southwest, east, west, north. There's a lot of communities that are rising with this tide of Central Ohio. And so I would say that the success has been fairly balanced. It's kind of unusual now because, when you have these large investments, these large headline grabbing type deals take place, sometimes those smaller ones, just don't make it, up to the public knowledge. But I think as you go around and interview different communities, as we work with our clients that are looking at different communities, everyone's energized. Everyone has their stories of the success that they're having right now in Central Ohio.
Let's say hypothetically, there's a podcast host who is a value add industrial real estate investor and likes this asset class. And this podcast host were to ask you, hey, you know what? You've got me convinced. I really like Central Ohio. I like the opportunities and I like the trajectory. How would you advise somebody who is looking for value add opportunities? Maybe I don't have, I don't have a $30 million fund, but maybe I raise money from friends and family and I'm looking for value add opportunities. How would you advise someone like that?
Yeah, I mean, the word value add is an interesting one right now in our market. It's meant different things over the years. But, I think kind of going on the heels of that last question you asked about, these different sizes and kind of what's taking place here in the market, we're extremely bullish on this Class B, type understanding of the industrial market. So Class B being maybe your lower clear height, your 20-foot clear versus 40-foot clear. Your building that was built in 1990 versus 2020. That 10 to 50,000 square foot tenant base size. We see a lot of opportunity in that space to uncover opportunities. They're not making any more Class B industrial, but those buildings are usually really well located within communities. And so we see opportunities there. And look, I think there's value add opportunity still on land in Central Ohio if you can find the right pieces. We're seeing a steady increase in land prices. We're seeing a hunger from other groups to come in and unlock those opportunities. So getting some of that Class B is where I think a sweet spot for value add is. John, I think the hardest thing right now is that you still have a little bit of a delta between where buyers and sellers maybe want to be. Certainly the capital markets environment has impacted that. 10 years ago, we had value add all over the place that you could, cash buyer, that maybe raise some equity could come in and grab. It's getting a little tougher though. You got to dig a little deeper right now to find those opportunities.
That's for sure. Dan, I want to ask you about your work in tenant advisory. So I know you're boots on the ground, and you've got a team that's working with you, advising these tenants that are looking for space, potentially looking for different space, a different location, maybe a larger location, maybe the right sizing. Maybe they've got a lease coming due, and they've got some sticker shock with the new lease rate that's being proposed to them. So can you talk to me about what's your experience in working with tenants looking at new spaces right now? What are the top factors that they're considering?
Yeah, it's certainly dynamic right now on the tenant side, just given the hyper changes that happened within the industry the last 3 years. Some of that's starting to calm down now. Vacancies ticking up a little bit. Demand is slowing a little bit, so we're kind of going into new waters here in that regards. But it really comes down to understanding the tenant's needs, understanding what they're trying to achieve in their business. And how real estate is going to impact, that operation, whether it's a relocation, adding a facility, downsizing, expanding, you name it. But it's really about running a thoughtful process to ensure that the tenant, our clients, are understanding the various opportunities in the market, understanding the strengths and capabilities of different owners. And, for industrial, sometimes there can be this mindset of, well, an industrial box is an industrial box. We try and really dig into these different spaces that are available in the market, understand some of the nuances that might affect our clients' business and our operations in those buildings to ensure that we're making the best real estate decision possible. But one thing that we try and stress with our clients is also around timing of when do you go out to the market, ensuring you have enough time to really make a methodical decision, not trying to jump in last minute and negotiating a real estate deal, but really running a thoughtful process to ensure that the best real estate outcome can be accomplished. There is still a lot of last minute decision making or last minute requirements that pop up for a variety of reasons across logistics space, and we handle those as well. But it's really using data, using technology to help our clients make the most informed decisions as we go through that tenant process. But again, I go back to the capital markets right now. That has really changed things in terms of how TI dollars might be getting funded, the strength of an owner to perform what they say they're going to perform. So you got to be careful going through the process, understanding all the different factors that a tenant's going to be facing in a new location or in a renewal in a location.
In terms of lease rates, I've heard some brokers talk about tenants that signed their current lease 5 to 10 years ago, and now that lease is expiring and their new lease rates are potentially doubling.
Mm-hmm.
Are you seeing rent growth like that in your market?
Yeah, we haven't got to the point of maybe doubling, but the escalations in our economics the past 4 years were certainly a lot to get used to for the tenants for a market that we were a little bit of a flat market, then we'd bump up, then we'd stay flat for a couple of years, and we've been on this crescendo. The crescendo is slowing a little bit now. We're at a point, and this is kind of a national trend as well, where the amount of product that's been delivered in the market is at an all-time high, while at the same time the tenant demand has slowed. And so now all of a sudden you have this divergence that took place the last quarter or two, to where vacancies are sitting around a little bit longer, and maybe developers and landlords who projected this continued crescendo are now starting to realize, all right, I need to get a deal done. Maybe I don't set a new record for a lease rate. Let me go back to my underwriting and find out what I can really do, to get a deal done. Because there's times in 21 and 22 where, someone would set a high mark for a lease rate and they'd be worried about it, only to find out a month later that their lease rate was 5% below what the next person signed up for. That has slowed. So now it's just come down to, that's what I mentioned previously about going through the process, is really understanding which owners, maybe the word aggressive is not right, but which owners are, kind of sharpening their pencil to do, a smart deal they can do versus, shooting for the moon. And there's a lot of moon shots that were going on the past couple of years.
Understandably so, because a lot of those landlords were getting those astronomical lease rates. But it sounds like from your perspective, some of that demand has slowed, as certainly we've seen increased supply. That's also true in other asset classes, because I was just listening to something this morning where a lot of these developers were making plans in 2020 and 2021 with these rock bottom interest rates and sky high demand, and they made these plans to build. But now a lot of those projects are just now coming to fruition. And so there's so much of a delay with that ground up development from when it's conceived to when you actually hand the keys over. And a lot can change in those couple of years. So it sounds like there's been a little bit of a transition in your market. How are you advising your tenants in terms of strategy? So, with timing, how far in advance should tenants be looking for new space? And how aggressive should they be in terms of negotiating advertised lease rates?
Yeah. Um, we really look at the window, you know, 15/18 months from lease expiration to really start having those boardroom discussions around, all right, what are the various scenarios that, might be in place for our real estate? If you're talking about a build to suit, you should really be, 2 years out from when, you really need the facility to launch the process. But if you're looking for existing space, try and set that strategy 15 to 18 months ahead of time. That way you can get in the market and look, if you have any type of build out within a space right now, you've got to be planning for 4 to 5 months of construction within a space. So you start putting some of those trigger dates in place, and you're almost wanting to ink that deal no less than 9 months before you need it in order to help accommodate for some of that construction that needs to take place. But what's really interesting is, for some of our advanced manufacturing clients, the heavy power type users, and again, we're seeing this in different markets. We're certainly starting to see it in Central Ohio. The timeline out to have significant power in some cases is, plus 2 years. If you're talking about, needing substations or heavy power brought to a site. So, that's another factor to keep in mind is how specialized of a building are we looking for? What are the critical pieces of our real estate? And then as far as, the how aggressive to be on the negotiating, we got to this point in late 2020 where developers and landlords stopped advertising rates. They put like a STO, subject to offer. And so, when our clients are asking us what are the lease rates of these different buildings, we have a general sense based on the work we've done in the past of where kind of the quote asking rate is right now. But it's almost like these asking rates have gone away. Now, it'll be interesting to see if they start to come back again as the market has calmed a bit. But it's really, I think, in the negotiations, it's figuring out what levers you want to pull and need to pull relative to TI allowance, the rate, term, escalations. We're seeing clients want the ability to purchase at some point during the lease term if they're looking to make a large investment in the space. Some of these clients are in the transportation, logistics, e-commerce. Sometimes they're making investments inside the building that are worth more than the building itself. So, in some instances, it's then figuring out, okay, which landlords are willing to allow you to maybe purchase the building 2 or 3 years from now. Each situation is different, which is, what makes it fun in this business. But yeah, I mean, really, being smart in your negotiations is important because, you also have to understand what objectives a landlord wants to get, and understanding what their critical aspects are. Are they a landlord that likes to have long term? Are they a landlord that term's not as important? So it's really figuring out, where that, kind of how you thread that needle between achieving what you're looking to achieve and understanding what position the landlord is in. As the building come up for refinance, et cetera. The list goes on.
Dan, let's shift to your work on the buy-sell side. So, in terms of owners and sellers, let's say building owner comes to you and says, I'm kind of tired of this. We're looking to move to Florida, or whatever their situation is. How are you advising potential sellers right now?
Yeah, it's a good question because what we've seen, again, I don't want to keep harping on 21, 22, but and you mentioned low interest rates before. That created a lot of capital, a lot of fury of buying and selling, and everyone was happy with what was going on. Anyone that's looking to sell right now that has owned the real estate for at least 5 years, generally speaking, they can probably make a 50% profit, compared to where they were, 5 years ago. Just that's a big generalization. So a lot of owners have a low basis in the building compared to where they might be able to sell right now. The challenge with selling right now is that unless it's maybe a 1031 buyer, given where the cost of capital is it's a difficult time to really get maybe that top dollar that you could have gotten if you looked at it, 9, 12 months ago. So really, when we're advising the sellers, it's really understanding, like, look, it's still a really good time to sell. There's still a lot of capital out there for industrial real estate. Industrial real estate is still the darling of the ball within a lot of capital groups. People are looking to invest more, whether you have land that could be industrial outside storage, whether you have a small multi-tenant building, whether you bought a bulk building at a low basis 5 years ago. There's still a lot of groups, a lot of capital being raised to buy these assets. But the thing that we're advising our sellers on right now is that there's not as much product out there as there used to be, and here's the reasons why. But there's a buyer for every piece of real estate, and we work with our sellers to really understand who the buyers are out there, who are the ones that can really perform, who might look to retrade you at the end of the deal, and how do you avoid that, and then just helping them understand what that process will look like.
Imagine this property owner comes to you and says, I've got a lease coming up, and I think this tenant might vacate, or I think I can get a higher rent rate than this tenant is willing to pay. How are you advising owners trying to lease up space right now?
Yeah, as far as leasing up space right now, our approach has been that you don't really want to create a vacancy for yourself for these next 2 years. The amount of competing spaces has really never been higher than it has right now in the last 5 to 6 years. So if you're giving yourself a vacancy, now is a time when you might be looking at 12 to 18 months of downtime before you find that next user, depending on what your piece of real estate is. But now at the same time, we're looking out 3 years, and because construction starts have slowed dramatically, there is still demand in the market, but we're kind of predicting, 2-3 years from now, we might be in a really tight real estate market again. But it's figuring out, what do you want to do these next 2 to 3 years until it gets to that point where, maybe it is a little bit more landlord favorable again. So, but one thing we're seeing is that when you have those tenants who are maybe in those buildings that say, hey, I'm a little bit sticker shock, I don't think I want to pay that rate. A lot of time what happens is they'll go out and look in the market, and they'll find out that, well, gosh, yeah, that's higher. But maybe it's not as high as some of these other groups are trying to get, and I'm better off staying in place. And I think most landlords in a day don't want to create a vacancy right now if they can avoid it, because the economics that they're getting are still way above the pro forma they ever penciled, 3 years ago when they underwrote or, last looked at the asset.
You may have just hit on that with some of the increased supply, but what do you find the biggest challenges that property owners of industrial properties are facing right now?
I think the biggest challenge they're facing right now is really on, just finding the right tenant for their space if they have the vacancy. It's that patience game. It's really, looking at the market. I mean, you look at the fundamentals of the Columbus market, they are still extremely strong. But you can't compare what's happening right now to what you experienced from the previous years. You have to be able to have, a patient mindset around the solutions that are out there in the market. But yeah, and that's the biggest challenge they're facing right now is that, if they build a spec building and it's sitting out there now vacant 6-9 months, they expected to have that thing leased up 6 months prior to completion. So there's a little bit of uneasiness around who's going to come lease my building. What's that going to look like? Because we haven't experienced what we're experiencing right now for the last 4 years. So it feels new again. But then, as we look at, the other aspects of our landlord clients and developers, the biggest challenge they're facing is just being able to get a site, go through the entitlement process, go through the zoning. There's a lot of pushback against industrial zoning now that didn't exist 5 years ago. So, it takes, a healthy 12 months to go from a site identification to closing on a site. And then, it takes another 12 months to build. So, you're kind of going into a market like Columbus saying, all right, what's it going to look like 2 years from now? Because that's probably how long it's going to take me before I have a set of keys that I can give to a prospective tenant, and before, I can make money on my years of investment.
Yeah, makes a lot of sense. How about you as a broker and leading a team at JLL? What are some of the biggest challenges that you and JLL and Columbus are facing right now?
Yeah, I'm fortunate to have a great team here in Columbus. A number of young brokers that have gotten into the business the last 5 years that are just learning so much so quickly. One of the things that we're mindful of is how technology is impacting our business, how AI is impacting the business, and just how we embrace that to deliver those results to our clients. But one of the biggest challenges is just figuring out where are you going to spend your time each day. There's a lot of different areas within real estate that you can focus on, and for us and for our team, it's ensuring that we continue to build a stable business that is here for the long term, not chasing a quick deal, not chasing a quick dollar, but really making those investments into the relationship, being patient in terms of when those deals come together, how they come along. But in Columbus, I think we're very fortunate in terms of the team we have here, what they're working on. They impress me every day. This conference room I'm sitting in now, I just had to kick people out of because I'm like, look, I need this room to do this podcast, and they're in here making calls, working on proposals, different solutions. So, I joked about 10 days before the end of the year. It feels like we're just middle of the summer in terms of how much is going on and kind of what our mindset is right now. But I would say, but one of the challenges is that you look out across the market, and when you do have a little bit of a slowdown, it's really reminding people that look, you can't look at your deals in a quarter or even a year. You really got to kind of have this 3 to 5 year mindset in terms of your book of business, the clients you're working with, and if you're doing the right things every day. I always tell people that this is the hardest easy business I think there is, and maybe that's why they don't teach it in college, because it's just it's not really a classroom type learning. But if you're willing to come in, keep working hard each day, even when it's not as fast and furious as it used to be, clients are going to see that. You're going to have business. You're going to win business. You're going to create opportunities. It just comes down to individual perseverance to get in the office, work with your colleagues, be creative, and never be willing to rest on your back foot in these times.
Really solid advice there, Dan. I've really enjoyed this conversation, just learning more about the Columbus market and the industrial asset class in your market. It sounds like things are going really well, maybe tempering a little bit, but definitely a bright future in Columbus.
Mm-hmm.
If listeners want to reach out to you, learn more about you, JLL, the industrial asset class in Columbus, where would you like to send people to?
Yeah, they can jump on LinkedIn. You can find me via LinkedIn, Dan Wendorf. Shoot me a message through that, and contact information is out there, and be happy to dive into any particular aspects of our market, any particular food groups within our space. I'll tell you, we spend a lot more time on data centers right now. We've got a number of brokers dedicated to that. That's been a whole new world that's really opened up here in the past few years. So, chances are whatever people are trying to figure out about the Columbus market, we've got someone on our team that, has developed a little bit of a specialization there, but always happy to tell a story on Columbus. And obviously we're proud of our Columbus crew for just winning the MLS Cup. We wish our Ohio State Buckeyes were one of the Final Fours, but, it is what it is. There's always next year for that.
You all have a lot of good things going for you there in Central Ohio, especially in the sports world, also in the industrial real estate world. Dan, thank you so much for joining me. It's been a pleasure. Thank you so much.
I appreciate having me on.
Listeners, if you enjoyed this conversation, feel free to reach out to either one of us. We love talking about commercial real estate. Feel free to reach out to either one of us on LinkedIn. Thank you so much for listening. Until next time, take care.